Hey team, Casey here. I found a really interesting property today. Is it a good deal? Is it a bad deal? Could it be your first deal? Could it be your second deal? Let's find out. So you guys, I found this home in the Miami area. It's 1557 Northwest 66th Street, priced at 474,000. The thing I like to do when I'm looking at properties is run the 1% rule first and foremost. That says that the gross rents should be at least 1% of the purchase price. Now, looking at this property, it's a 4 bed, 2 bath. If you scroll down a little, it's a duplex. So that means one side is most likely going to be a 2-1, 2 beds, 1 bath. The other side is going to be a 2-1. I know in this area that rents for 2-1s is roughly 2,000 to 2,500. So assuming we got even, let's say 2,400 in rents for these units, we'd be looking at $4,800 gross monthly rents. And 4,800 is over 474,000, over 1% of 474,000. So this deal right off the bat is saying, okay, this deal could meet the 1% rule and therefore it could be a good deal. So let's dive in. I like to look at the photos first, of course. Let's see what's going on here. All right, so the building is a little bit older, but that's okay. Looks like we definitely need some new windows, some impact-proof windows for this area to get the best insurance rate. Scrolling down, the yard looks fairly clean. There's room for some parking. Definitely need some concrete work. That could be an improvement to the property. So that's all good signs. Nice fence out front. Looking on the inside, definitely need some new fixtures in this property. When I see a property that needs upgrades, I get really excited because you can start putting renovations in and building equity right away, which is what we want to do. Scrolling down, looking here, yeah, like I said, definitely new windows, new fixtures. Yeah, I could definitely do, I think these are cabinets up here. I don't know, I can't see them that great, but definitely floorboards. The floors don't look too bad. Kitchens look pretty dang nice. Yeah, okay, not too bad. Closets, maybe some new paint. I can't see it that well, but yeah, right off the bat, this property looks a little older, but could definitely use some renovations, which will up the rents and help you grow equity. So from the photos, I'm liking it. Yeah, some yard space. Maybe this is parking space over here. I don't know. Let's keep diving in. I'd then like to read the description. So let's see what they have to say. All right, fully rented duplex in Brownsville, fully renovated. I don't think it's fully renovated. Definitely didn't do the fixtures, the floorboards, or the windows, but brand new roof. That's oftentimes something that you have to do right away on these properties in this area. So I like the fact that brand new roof is already done just in 2025, just last year. So that is awesome. That can be, a $20,000 to $30,000 job. Bathrooms, electric, and plumbing. Property will sell at appraised value. This fully remodeled, move-in ready, 1-story, 4 bed, 2 bath duplex has fresh paint, updated kitchen with stainless steel appliances, and new central AC with a 10-year warranty. We definitely want to see if that 10-year warranty would transfer to the buyer. All right, that's good news though. New AC units. The upgraded kitchen has stunning countertops. Did see that the kitchen looked pretty nice. With a separate entrance, it's great for leasing. That's awesome. If we have two families living in each side, they're going to want their own entrance. That will definitely add more appeal to this rental. It's great for leasing. The fully fenced property allows RV/boat parking with no restrictions, no HOA. No HOA is huge. Less restrictions, less fees, and it's near Wynwood, downtown, and Brickell. Only one water meter. That could be somewhat of an issue. Not really. I would just say that the landlord would want to pay the water and then bill that out to their tenants. Electricity is in the back unit, is monitored privately. City of Miami will not allow 2 separate meters due to the lot size. Okay, again, could be an issue. I don't really see it as an issue if the landlord just paid the electric and then billed it out to each of the tenants. Okay, I'm coming to my first red flag, and that this property has been on Zillow for 166 days. That's quite a long time. I would definitely want to check in with the real estate agent and say, hey, why has this property been on Zillow for so long? The next thing I'm going to do is I'm just going to take a peek at the area. They said it was in Brownsville. So let's scroll out and see where we're actually located. So we have downtown right over here. We have Wynwood right here. Yeah, not that bad of an area. I would see this as kind of like a working class neighborhood where we have police officers, teachers, working class people that are perhaps commuting to the city area. So I like it. I like it. I'm no major red flags so far, minus the days it's been on Zillow. The next thing, you guys, I'd like to look at is the facts and features. So what are they actually selling it as? They're selling it as a 4-bed, 2-bath. And then we also learned from above, it's a duplex. Let's keep scrolling down. I like to look at my property taxes. So yeah, we're $4,965 per year. I'm going to take note of that. That's going to come up later when we get into looking at this deal on the calculator. All right, you guys. So after I look at this property from a Zillow standpoint, the next step I take is looking at this property on Google Maps. I'm going to jump over to Google Maps, and here we go, 1557 Northwest 66th Street right here. I'm looking outside the property and making sure it's not just packed with crap. It looks like it's fairly clean, nice fence. There's not a bunch of clutter. It's got pretty good parking, like no major red flags. The next thing that I'm going to look at, and it's probably the most important thing I'm looking at on Google Maps, is gentrification. I want to see if this area is growing, if this area is up and coming, if the home values in this area are increasing. So, okay, look at that. End of the street, you guys, right off the bat. Boom, look at that. New apartment complex, big building. This is telling me, okay, there's big companies coming in here and building apartment units. There's one right over there. This area is growing. There are people here that need places to live. That's awesome. Let's go look at the other end of the street. There we go. And look at that right there. Boom. Church on the corner. What more could you ask for? I mean, definitely research the area. Look at the crime rates to make sure it is a solid area. There's not a bunch of bad things going on, but I see a big apartment building. I see a church on the corner. I'm already getting good vibes from this deal. So team, the next thing I like to look at is the property appraiser website. And this is going to be a website you can find anywhere you're looking or where you live. Okay, this is going to be public information on the county appraiser website. So I'm going to plug in the address, 1557 Northwest 66th Street. And what I'm looking for is that the property matches what the seller is selling. So we are being marketed a 4-bed, 2-bath duplex. Let's make sure that the county website matches that description. So if we click on the property here, the 1557 Northwest 66th Street, I'm going to scroll down and I'm going to see that this property is listed as being 1 floor, 4 beds, 2 baths, and 2 living units. All right, this is a duplex. They're selling it as a duplex and it's being listed as a duplex. The next thing I'm going to look at is the zoning. I want to make sure that the zoning is legal for what it is built as. Look down here, my zone is a T3O zone, and that is primarily for duplexes and general buildings. So this is a legal duplex. I'm happy. I'm not going to have any zoning issues. If I were to try and, build the building up into maybe a triplex or a fourplex, I'm not sure if you'd be able to do that, being that this is a duplex area in a T3 zone, although this O says it is an opportunity zone, so there may be some room to make this building bigger someday. But as of right now, this is a legal duplex, so no red flags here, looking good. The next thing I like to look at is the owner, so who is selling this building. And I can see right here that the owner is 1557 Northwest 66th Street, LLC. So this is a business that is selling this property, which in my eyes, that tells me that these people are legit. They're investors. They know that they should be owning their properties inside of LLC. So I'm really happy to see that. So what I'm going to do now is I want to make sure that this LLC is in good standing, because if it's not, they don't have the right to sell the property. If they are in good standing, then they do have the right to sell the property. So now I'm going to jump over to the business website for the state of Florida. And you would do this for any state where you were looking. So here we are on the Florida Sunbiz website. So you guys, I'm going to go ahead and search this LLC, and I just did. And I see that this LLC, 1557 Northwest, is active. I give it a click. Yeah, right here it says the status is active as well. I don't see anything that is making this LLC not in good standing. So as of right now, I think that this LLC has the right to sell this property, this legal duplex, like we saw before. So the next thing I like to look at now is, let's look at this LLC and let's look at this property and let's see if it has any liens against it. Because if this property has a lien against it, some outstanding debt, some violation, major red flag. I found a lot of properties that I really, really like, but they had a lien against them, and that's just a no-go. I don't want to deal with it. I don't want that lien to transfer to me. I don't want to wait for them to have to sort it out. It's just a big giant mess. So let's look up this LLC and let's make sure they don't have any liens against them. I'm going to copy that over. We're going to go to the clerk of the court and controller website for Miami. So here we are on the clerk of the court and controller website. I'm going to search the name of the company. If it was a person, you check this person box and put their name in, but this is in fact a company. So we put the company name in. Let's go ahead and click search. All right, so here's the party names over here. I'm looking for over here on the right in any of these documents, anything that says lien. Right now I'm seeing quitclaim deed, and that's just the transfer of the property. I'm seeing a financing statement, no issue, and I'm seeing a mortgage statement. I'm not seeing any liens on this property or this company, so I think we're in good standing. Box check. Now let's move on to the super fun part, and it's honestly what makes or breaks the deal. The numbers, the math. Here's our custom made deal calculator, you guys, and it's what I use to run the numbers on every single deal. And like I just said, at the end of the day, you can love the property, you can fall in love and get emotional with the property, but if the math doesn't work, it's not a good deal. It's not an investment. You just have to move on. No hard feelings. So inside our program, First Asset Academy, we give you access to this calculator and we walk you through and we teach you step by step on how to use it and how to understand all these key figures over here in detail. But let me just give you the quick rundown today. Let's see if this deal is a good deal or a bad deal. So I like to put the address of the property right up top and then the link to the property right here, just to keep us really nice and organized. If you're looking at multiple properties, you might have a bunch of tabs down here, and we want to know which one is which. So first thing we got to put in is the purchase price, and it was $474,000. This is a plug and play calculator, you guys. You just plug in the numbers and it pumps out all the other values for you. So let's say for our loan, you guys, we need to put down 20%. That means our loan amount is going to be 80%, telling me my equity amount, my down payment is going to be $94,800, and my loan amount is going to be $379,200. Let's say we get an interest rate of 6.5%. This is going to be a 30-year loan with one payment per month for 12 payments per year for 360 total payments. That tells me my payment per period is going to be $2,396.80. The sum of my payments will be $862, and my total interest cost is going to be $483. Now, let's get into the income variables. We said at the beginning that this is 2 units at 2 bedrooms, 1 bathroom a piece. Now, I know in this area, 2 ones are renting from $2,000 to $2,500 per month. Different areas have different rents. You're going to have to, if you're searching in Texas or North Carolina, you're going to have to look at rentals in those areas, get some comparables to know what your units could rent for. But let's say in this example, I said between $2,000 and $2,500, we renovate the units, we make them pretty dang nice. We can get $2,400 a pop. So that's going to make this $4,800 in monthly rents. Okay, I always like to put in yearly rent increases of 2%, and I like my vacancy rate to be 5% when somebody moves out and you're trying to fill that unit. Let's now put in all our expense variables. Remember from the Zillow listing, they said that their property taxes were just under $5,000. So let's assume for our first year, our property taxes are going to be $5,000. Insurance, again, it depends on the area. I know in this area for a duplex like this, insurance costs would be somewhere between $6,000 and $8,000 for the year. So let's put in $7,000 right in the middle. Property management in this area, it's usually between 5 and 10%. Let's say we get a really good deal and we're going to do 5%. Maintenance. For maintenance, I like to estimate $125 per unit per month of the year, just a little rule of thumb. So if I do $125 times 2 units times 12 months, that's going to be $3,000 per year. Right now, this maintenance at 3.5% would be a little bit low. So let's up that to maybe 5, a little bit higher at 5.5, a little bit lower. And there we are. We're right about 3,000. So I like that. Utilities, we always got to factor those in. That's going to be, water, power, electric, things that you're paying when the unit is vacant. So let's maybe just calculate that at 1.5%. Okay, so like $864 per year. Moving down, so renovation costs, and this is where you kind of got to eyeball it. If you have to make some calls, you can, but I just like to eyeball it. I knew that I for sure got to do some new windows, new light fixtures. The floors look good. The kitchens look pretty good. Definitely some new floorboards. Let's assume about $30,000 in renovations. All right, so this is where we got to put our total equity invested down. That's going to be our down payment plus our renovation costs plus our closing costs. If we scroll above, we know that if we buy this property at $474,000 at 20% down, my equity amount is going to be $94,800. So let's take $94,800 plus our renovation costs. We just said would be $30K, $30,000 plus closing costs on a deal like this. I'd say it'd probably be somewhere between $25,000 and $30,000. On the safe end, let's just add another $30,000. So that gives us our total equity invested on this property, $154,800. We have all the variables put in except these other ones. Let's put the number of units. That's going to be 2. Put in your tax rate. Let's say we're in the 24% tax bracket, and our years for depreciation is always 27.5 for a residential property. Notes on the property, if you want to put notes in, I just add them in here. Always want to stay really nice and organized, especially if you're looking at multiple properties. You guys, we have all this information plugged in. It's time to get into the fun part where we look at the key figures and we answer that question, is this a good deal? Is it a bad deal? So in our course, First Asset Academy, we break down all these different things and what they mean. But for today's sake, I'm just going to tell you that I mainly look at 5 key figures when analyzing a deal. That's my after-tax cash flow monthly, how much money I'm making. I'm going to look at my after-tax cash-on-cash return, my cap rate, my after-tax ROI, and my payback period. What are these things? Well, after-tax cash flow monthly is simply the money you're going to make on this property after taxes. I always want that to be positive. In this case, it's $583. We're making money on this deal. We're paying all the expenses and the taxes, and we're getting money back. I like that. My after-tax cash-on-cash return. I always like that figure to be above 5%. Right now, we're at 4.52. We are a little bit low. Cap rate, we're at 7.58. I like it to be 7-8% ideally and above. So right now we're pretty good, but could be better. After-tax return on investment, ROI, I'd like that to be above 7%. So right now I'm liking that figure. And my payback period, that's the amount of time it takes for me to make all the money that I invested back. I like that to be at about 15 years or lower. So 21.53 years, that's too high for me. So what's the answer to the question? If we buy the property at their asking price, is it a good deal? Well, in my eyes right now, you guys, it's not a great deal. I wouldn't go for it at that purchase price. I'm not saying it's a terrible deal, but it's definitely not a really good deal. So what can we change to make this deal a good deal? Let's start with the purchase price. That's always negotiable. It's priced right now at $474K. Let's say we get this property down to $450K. All right, so that's going to change my equity amount to $90K. So I need to go and update my figure down here, my down payment, renos, and closing. So now let's take the new $90K plus my $30,000 renovations plus my $30,000 in closing costs. And my total equity invested goes down to $150,000. All right, let's look over at our key figures. Whoop, $150,000. Boom, we scroll down. I'm looking at the orange things. Cash flow monthly, I'm making $700 a month. Cash on cash return, 5.35. Awesome. Cap rate, 7.99. Great. After tax return on investment, 8%. Payback period, 17.35. A little bit too high. We're checking 4 out of the 5 boxes, you guys. This is really close to being a good deal. What can we do further? Well, let's try to maybe bring the price down just a little bit more. Can we get this down to $435,000? $435 makes my new loan, my new equity amount $87,000 plus my $30K in renos plus my $30K in closing costs. Let's call our total equity invested $147,000. Boom. Go over here, looking at the numbers. Is my payback period? It's down to 15.38 years. I definitely think this is a good deal at this point. What's the answer to the question? Good deal, bad deal? At the purchase price, you guys, I don't think it's a great deal. If we can negotiate that down, this deal is a good deal. It's something I would chase after. All right, team, thanks for watching. I hope you learned something in this video today. If I missed something that you look for when you're searching for properties, make sure to drop that in the comments. And if you're interested in real estate and you want to buy your first property, we would love to help you in that process, give you access to this calculator, walk you through all these key things to look for. There's a link in the description. You can learn more about our program, First Asset Academy. And make sure to subscribe for more content like this, you guys. Thanks for watching. See you in the next one.